Hello, everybody. My name is Ayanda Mdluli, and I have a special guest for you today, Mr. Khandani Msibi, the Group CEO of the NUMSA Investment Company. NIC has a number of subsidiaries, such as the NUMSA Financial Services, the Dove's Funeral Group, and 360 Life Insurance, which is one of 4 black-owned insurance companies in South Africa. Today we're going to talk about the black players in the insurance industry, focusing on the barriers to entry and the changes that need to be made in order for our people to enter this lucrative market. Thank you very much for joining us today.
Thank you very much, Ayanda.
Now, first things first, what are the numbers like for black-owned insurance companies in South Africa? What is the landscape looking like?
I think there are about 5 black insurance companies. 4 that are active, and there's a Bupilo that has been under curatorship for some time now. And all the 5 black insurance companies account for less than 0.5% of the total market. So which means that the established white insurance companies account for 99.5% of the insurance market.
What are the main barriers to entry for black players in the market?
The whole transformation process was initially focused on the partnership of black individuals with the white insurance companies. There's very much little effort in terms of black people entering the insurance market and owning insurance companies. And that evolution was should have been the priority, in the sense that the primary objective of transformation should have been to enable black people to enter into industries on their own, as opposed to have them as partners of white companies. Because what you have is that if you are a BE player, you only have the right to a dividend, which might be 5% of the company's turnover, and you get a portion of that, in terms of your returns. But you don't participate in the 95% of the value activity, right, in terms of who becomes a CEO, who becomes a CFO, where they employ, where they spend CSI, and what they do with enterprise development. Because you tend to find that these BE shareholders play at the board level only, right, and they are not at the operational level. And I think there's a value escape that happens as a result of a non-participation in the operations and running the organization, which we believe that should be the focus of black business, that we participate, we own companies, and participate and compete with established white business in all the markets in which we want to play.
What are the main barriers to entry for black players in the market?
There's a number of barriers to entry. But first, when we talk about transformation in this industry, this industry is a regulated industry. Right? I mean, previously, we had the Financial Services Board, the FSB, and now we have a financial sector market conduct authority, and then which is the old FSB, right, which is just looking at the market conduct, and we have the Prudential Authority, which it now resides with the Reserve Bank. But if we went back to history, which is where we started with the BEE, that during that period of heightened economic transformation, there has not been many black insurance companies that enter the market, which means that part of the failure of the system is that the regulators were never given a transformative mandate, in the sense that there weren't any targets for the FSB to achieve in terms of ensuring that they license black operators that can enter the market. Right? And in as far as how the FSB also conducted itself, it tended to emphasize restrictions such that black players did not enter the market. Right? I mean, there are solvency requirements, right, whereby to have an insurance license you need to have 50 million rands. Right? But if you think about it, if you were to start today to run an insurance company, you don't have the kind of risk and liabilities that require you to have a solvencies or to have reserves of 50 million rands, because you're not carrying a risk that actually requires that kind of a cover. And that actually meant that for any black entrepreneur, he's got to think about putting down money for reserves in a business that does not exist. Just as when he's applying to get a license, he must have 50 million rands that is sterilized, sitting, doing nothing, because the regulator has so regulated in terms of the rules of the game, right? And you also look at some of the compliance issues, the need for actuarial services and so forth, which increases the cost, right, for any startup, right? So to actually become a startup in an insurance company in the previous dispensation, you needed to have a high capital layout for this, right? And there's been some change in terms of the microinsurance opportunities, which for some of us is kind of a two-edged sword. Two-edged in the sense that, yes, microinsurance has lower barriers to entry, but the catch is that you have what we would consider an inferior license, in the sense that it is not the license that the big boys are playing on. We would have preferred a situation where the licensing regime is the same, but there's a progressive compliance requirement in as far as the regulations are concerned. That if I'm starting up, right, don't expect me to put 50 million rands down. Maybe I should put 500,000 or 1 million rands down for that. Right? But I must have the kind of license that actually gives the consumers the confidence that I am not a spaza insurance company, if you like, but a proper insurance company that can be relied upon. But the ratio of the risk, right, to the capital that is available must actually make sense to the entrepreneur.
Why is it that our government, through our various development finance institutions in South Africa, why are they not doing enough or providing more leeway or getting rid of the red tape in order for black players to gain access to that capital and play among the major monopolies in the sector?
You raise an important point in terms of the role of the state in this. You remember that there's a black industrialist program by the government. The shortfall with that program is that it excludes financial services, right? It excludes insurance, and I do not know the thinking that went into saying only support the emergence of black manufacturers, right? And exclude insurance and other financial services sectors as areas that black people aspire to enter into. My ideal situation would have been where the black industrialist program, right, cuts across all sectors and not just manufacturing, because at the end of the day, we are not going to be limited to manufacturing. We have to play across all the sectors, be they financial services, be they mining, be they industry, be they retail and agriculture, and perhaps tourism. So there is a need for the state to rethink its a black industrialist program to include other sectors that are so far excluded.
Why did the National Union of Metal Workers of South Africa decide to venture into the financial services sector? What was the thinking behind that?
We own a company. It's a group that is called 360 Financial Services Group, and within the group, there's a Doves Group. There's a 360 Life, which is an insurance company. We have Sechaba Medical Solutions, NUMSA Financial Services, and a number of subsidiaries in IT and support services within the financial services. Right? Now, financial services is a very crucial part of the ordinary worker's life. I mean, if you were to look at the ordinary person's expenditure, right, that you would have contribution to retirement fund, you'd have contribution to medical aid, both of which you consider them as financial services. You pay a bond, you pay a car, you have an insurance for your bond and your car. You'd have various insurances and investment, including funeral policies and life policies. If you are to look at all of those areas of expenditure, they make up about 50% of an average working person's cost. It means that before you pay for bread, 50% of your income goes towards financial services. And we invested in financial services, one, as a business opportunity in order to be in a growing and profitable sector, and two, to be in a position where we can offer NUMSA members cost-effective financial services, and to begin to talk into the whole area of cost in as far as and value in as far as financial services are concerned. We've actually done recently a survey for NUMSA Central Committee where we demonstrated to them how we've actually saved NUMSA members money. We've taken policies with us in relation to the pricing of the similar products in the market. Right? And as a company, we believe that the cost competitiveness, right, is the most important competitive advantage that you can have in any market that you participate in. And there's things that other providers will look at as a competitive advantage, but we regard them as a basic entry in terms of the structure of the product, your ability to deliver the service, your ability to deliver to pay the claims on time. Those are minimum requirements, but being able to deliver to a consumer a product that is, and in our case, at least 40% cheaper than the market in which you operate, has been our ambition and achievement in terms of value creation for NUMSA members and our other clients.
You explained that you leverage off the membership base of NUMSA. So now, do you try to attract clients from outside of the union, and if you do, what are your growth prospects looking like?
Let me correct that. I said we leverage our base. Our base is both external and the NUMSA clients. So that we can deliver a value proposition that is attractive to both. Right? And whilst on the one hand we have a group scheme base, which is NUMSA members that we can engage with. On the other hand, we have general consumers. Right? The profile of our business, right, is 90% external people, about 10% NUMSA members.
Okay.
Right?
Yeah.
So we treat our consumers with the same level of sensitivity that we treat NUMSA members, right, who are our stakeholders.
Okay.
Right? And we present a value proposition that we want to argue, right, that it is the best in the market.
Okay. Since you're operating in this market as a black executive in a white-dominated financial services sector, can you just highlight for us what are the key challenges that you've had to overcome in your career and in your position as the Group CEO of NUMSA Financial Services?
Well, the most interesting aspect about the South African business landscape, right, is that while there's talk about the BE and about enterprise development, those considerations don't really exist in the real world. Right? In the real world, we're an insurance company. The big insurance companies don't hug us and support us. Right? They compete with us, and they'll cut us at the legs if they get opportunity to. Right? So we operate in a highly competitive environment. Nobody does anybody a favor, and we're happy that we're standing on our own feet, that we're not leaning on anybody's wall. We're standing firm in terms of competing in the market with all the players that are out there. We know that our competitors take no prisoners, and we don't make ourselves vulnerable to anybody in the market.